Oh, look at you watching. Okay, let me just make sure I send this all out. Don't know how my dogs just got in the room. Interesting. Okay, we are live. We are live. We are live. We are live. Okay, let's just give it a minute. Let's let people get in. If you guys have any questions, always feel free to write them in the chat. We could always see that. Just give me 1 second. Okay. Gonna give this 2 more minutes and then we'll get started here. I'm gonna post this. Let me see. This light just keeps going off. I gotta fix that. Let me just post this here. And lastly here. Okay. Okay. Hey, what's up? What's up? Again, if you guys have any questions, feel free to ask. We're gonna go over a bunch of stuff here in 30 minutes. It's gonna be recorded. My dog's going wild. Okay. Let's go into our first trade of the day. Sorry, this is not our first trade of the day. We're going to go over EMAs, 9 to 21 EMA. We're going to go over spreads, and we're going to answer some questions. Nothing much. How about you? Yo. So let's go over our trades for today. We had some really good ones, and then we had some ones that did not work out well. Today was a red day for me on trading regular options, but I did really well, adding in spreads. Give me 1 second here. So, again, very well trading spreads. I ended the day green overall, but trading just regular options, I ended red, and there was no reason why I should have did that today. So let's go over this right here. Okay, here's our first trade of the day. We have IWM. And again, if you guys have been watching my videos that I've been posting, I look at 2, 3, 5, and 10-minute candles for trend dip buys and or reversals. In this case, we're going to have a dip buy here, and you have IWM working perfectly here. We come into the 9 and 21, the pink and the green, and we get a very nice entry which we were able to sell right at the highs. And you can see it chop for another around 25, 30 minutes there. We sold it all at the highs there as the market was kind of looking a little weak. Individuals were also kind of tweaking around there. So we got a nice trade on that one. I think it came out to like 20, 25%. So that was a good one. But you could see going through the rest of the day, there was truly no reason to sell this. And I should have not sold it because following this strategy, that 9 to 21 EMA strategy, all you have to do is continue to hold until you get a break of the 21 EMA. Okay. In this case, you get a break of it here, and we could have got another 50 to 60 cents. Obviously, the contracts would have been better. I obviously would have trimmed somewhere, as we kept riding up. So it would have been a much better trade. You look at the 5-minute, and you could see we had a 21 EMA hold. But in this case, when I'm looking at the 2 and 3, I would personally sell it and again take my profits. Amazing trade in that in itself. Let's go over the best trade of the day, 100%. And this is a crazy one. Let me get rid of this. Look at UNH here. We took an entry right here. Now, sadly for me, it didn't fill. For others, it did, and I'm very happy it did. Look at this is literally the perfect setup on the 9 and 21 EMA. If I pull up a 2-minute, if I pull up a 3-minute, it doesn't matter what it is. If I pull up a 5-minute, I went to the next day. It does not matter what it is. You can see we hit the 9 EMA perfectly, and you can see we ride this up all day. Just on this one alone, before we got the first drop, entry at 327, let's say 50, or let's just say 328. Let's give it $1 higher. Okay. You had upside of over $5 there in under 30 minutes. Now, holds the 21, you have upside of another $9 there. This total trade is over 10 to 11 bucks just on this alone. So absolutely phenomenal setup here. Just following that trend, buying the dip on a strong name and continuing to ride it. We have another trade here on Palantir that we did really well on. I'm just going to go over the winners first, and then I'm going to go over the losers, and we could kind of dissect what worked and what didn't. In this case, same thing. You could look 2, 3, and 5-minute is all lining up. We grabbed it right over here, and you can see it just rode it up for the rest of the day. We did sell this one once it got to around this area right here, around 173.70. So we actually got a perfect kind of trim out there. I guess in this case, I sold it. Again, another scenario where I didn't truly have to sell it, but I just wanted to, take my profits and kind of move on. Again, you could have had another $3 plus of upside. In this case, if we got stopped at the 21, we would have had actually basically about the same price we sold it at. Because if you look here, it would have been down here. So actually, this one was a pretty good trade on where I sold it just originally. Now let's go into the losers. We have 2 of them here. Microsoft was the one that got me red, and we got an entry. $348 at 11.55. So 11.55 is going to be right around here. So here's where this comes into play. Now, okay, come on. 11.55. Okay, so come on. Stop playing with me. Okay, so I actually took an entry when we started. I think I was on the 5-minute here. Jesus. Sorry, I'm going around everywhere here. My fault. Yeah, I took an entry right around here. And sadly, it went under, and I should have held it truly. Well, hold on. I shouldn't say that. Gotta follow the plan. But what I'm trying to get to here is this was not the best setup. I mean, we were still... Look at the indecisiveness on the multiple time frames at 11.55. And you can see we just weakened out. I got stopped out when we had a 2 or 3-minute close under the 9 and 21. And you can see on the 5-minute, we have a close under it. So this was just a poor entry. Now, in terms, this trade would have worked. But That does not mean anything. Now, it would have been better if I waited 10 to 15 minutes where it actually was lined up. In this case, look at this. You can see we get a dip buy. You can see we have all EMAs, all time frames, 2, 3, 5, and 10 minute starting to work out perfectly here. We get a dip buy and we get a 9 to 21 cross at 12.12. Same thing here at 12.12. And then same thing here in that 12.10 to 12.15 candle right around here. So here I had upside of over $3+ here. That would have been the better entry. I just had to wait 15 minutes. And again, poor just entry timing there. But I hope you could kind of see the difference on the other 3 trades, Palantir, IWM, and UNH compared to this one. Next, we're going to go over is Apple. This one we took a trade on, and I see I have some questions. I will get to them in just a moment. I just want to get through this right here. So this was our biggest loser of the day. And again, you can see my winners. I size smaller. I'm waiting for funds to come in for this Alertify into this brokerage. So I'm just trying. I'm in a cash account right now for it. So I'm trying to size kind of weirdly, I guess. So my wins have, in this case, have been, kind of crazier. 10 o'clock. Let's look at Apple at 10 o'clock. Now, I do want to state, I actually thought this one was going to push higher. I mean, Apple has been so strong over the past couple of days, weeks. 10 o'clock, you could see on every time frame. Now, this is an example right here where it just didn't work out. The entry itself was actually good. It just did not work out. So you can see right before that, it holds 9, it holds a 21, and it gets back up over the 9. This is where I entered right here on this candle right here, the red candle. Again, you could see holds above the 21, reclaims it right on the next candle, and holds the 9. And then lastly, again, sorry, I don't know why I throw it here. Again, this one holds the 9. I get in on the dip. So this entry was 100% fine. The timing was fine. I got in on the dip into the 9 EMA. It just actually didn't execute. And that is perfectly fine. I'm perfectly fine with entering my strategy and coming out with a loss. I know going into any trade, you can come out with a loss. This is a perfect setup, a perfect trade, and it just didn't work out. And it's something I would follow 100% of the time. I mean, if I follow it again, you follow it on UNH, it worked out. You followed it on Palantir, it worked out. You followed it on IWM, it worked out. Microsoft, bad timing, everything wasn't lined up. I took a loss. That was a bad entry timing. Apple came right into the level, 2, 3, 5, 10 minute, all holding. That is something that I would take every time. But again, it just turned out to be a loss, and that's that. So what I was looking at here was a stop loss under, at the time, I think it was right here, 287.18. So I was giving it about 50 to 60 cents. And again, we got stopped out. It went under the 9 and 21 on multiple time frames, and I was stopped. And again, perfectly fine. You move on to the next trade. It's all about capital preservation and patience. So now that we went over a little bit, on the winning and losing trades, I do want to get some of these questions here. I'm very glad to hear the UNH trade. I'm very glad to hear that worked out for you. Yeah, UNH went over, I think, $800 a contract today. Palantir probably went over $300 a contract today. Yeah. And again, if I timed that Microsoft one right, it would have been perfect too. When I look back at it at least from my entry, we would have made about $80 to $90 a contract, which is over about 25, 35%. So, it would have been a great trade. It's just, again, poor timing. Okay. So quick question. By the way, if anyone does have any questions, feel free to write them in the chat. We're going to go over them. And then right after this, we're going to dive into spreads for about 10 to 15 minutes, do some questions on that, because I know a lot of people have had questions on that. and then that will be it. So, what are your lines and indicators on the graph? 2, 3, and 5 EMA. So, no. When I'm talking about the 2, 3, 5, and 10, I'm talking about the time frames. So, 2-minute, 3-minute, 5-minute, and 10-minute. The EMAs, the 9 EMA is my pink one right here, or pink it. Yeah, pink. The green EMA is my 21 EMA. The orange EMA, the orange is my 50 SMA, and the light blue is my 200 SMA. And then I have volume point of control, which you could see it's probably not going to show it here. Let's see if it shows it somewhere else. Oh, no, it's right here. I'm sorry. This dark orange straight line. But yes, that is what I have for those. And let's go over this Amazon swing for a second, okay? So here's why I am long Amazon. I've actually really liked Amazon over the past few days. It's been very strong, but I like this 2-day dip right into the 9 and 21 EMA. The 9 and 21 are about to cross. 9 is about to cross above, which is bullish in a case. But you can see we held that, we wicked, we gapped down on this candle. You could see buyers came in. Now I'm looking for a move back into 234 to 235 tomorrow to hopefully trim out these contracts and take a profit on that. Let's go over a Dell trade as well. Now, this one was looking much better when I did an ad earlier in the day at around 1 o'clock. But I'm still okay with holding it. And here's why. So here's why I initially actually got long. We had, look at all the candles here, these 3 candles, they all end up as basically hammers or just really tight, upper set dojis. You can see buyers are really supporting this, especially on the 9 EMA. You can see we get a gap up here on this one, and we close over the 21 EMA. So we got a long at this 135.40, and we were green. We did trim one out of our 3 contracts. Again, sizing decently small due to the size of the account currently. And today we gapped down, obviously, with that Microsoft news and the market dropping over 200 points 30 minutes before the open. Otherwise, Dell was actually gapping up over 137. So this would have been possibly a good trade today. We probably could have closed it today, probably breaking to that 140 area I want to get to. We did get back up, and you're going to see this here, to that 135.40. And we were over the 21 EMA again, which is around 134.70. Yes, sir. 134.70. And, just by the end of the day, it did get weaker. Now, what I do like is we held the prior 2 days or prior 3 candles, closes here and open, and we wicked it. Again, we are at the lower end there. So if this trade does not really work out within the first hour and a half tomorrow, I am going to close it for a loss. And again, it's something that, I'm going to take that trade. And if I lose, I lose. It's a part of trading. You have to know going into trading, you are going to lose trades. People think you just go into trading, you can hit everything's going to be a winner. That's not true. You could win 4 out of 10 times and make millions a year. You could win 7 out of 10 times and lose $1 million. Again, all matters about risk management. All matters about being patient and sizing appropriately. How do you choose which put and call price contract to get into? So that's a good question. Here, let me bring that back up. Sorry, so people could see that. That's a good question. So in this case, I'm swinging. I personally like to go a month out. Now, I've been doing a little copy trading on Alertify, and right now we can't really go a month out. It's like kind of glitching, and they're fixing that right now, which is great. So I went to the December 19th calls. I wanted to get at least 2 weeks here. And I like to go basically kind of near the money. So in this case, actually, it wasn't really that close to the money. I did do 140 calls. And when I specifically, once I get the funds in my account, which will be in tomorrow, I will have the funds to play that near the money. In this case, if we're entering at 135.40, I'm going to look for 137.5 calls. I usually want to get that next strike out personally. That's basically how I do it. I like it that way. For Amazon, I did 237.5 calls for December 19th. So again, $5 out. That's 2 strikes out. And same thing with Dell. It was 2 strikes out. So I don't really like to go far out because then you're just kind of, hurting yourself in a way. You're basically lottoing to, get a smaller price contract, which I don't think is beneficial. Oh, how do you compare your chart levels with Heat Seeker, and do you wait until a level hits before entry? So this is a great question as well. I do have Heat Seeker up basically at all times. Now this 135 area, reason why I like Dell as well is you could see we start to have, some levels above that are really starting to add up here. And you can kind of see the same thing here. I mean, when we were over 135, it was better, but you can see same thing here. We have some little levels that are adding up, and then we have this one, this one. So personally, I like Dell for that reason. I'm looking at my own support and resistance and then using Heat Seeker as my confluence. Just added confluence. Same thing with Amazon. You can see we're kind of holding this 230 area. That's a big spot right there. And then it has buying spots above 240, 245, 240, 245. Same thing here, 260. So Amazon, it looks like they do want to push us higher. You could see the same thing on VEX, So that's how I basically use it as added confluence. Hopefully that helped a little bit. Now I want to kind of go into spreads. If you guys have any questions, I will still answer them. But other than that, I do want to go into spreads now. So a lot of people have been asking me questions about spreads. And I think it's a strategy that is highly underutilized. Let me pull up my Google Sheets. Okay, so here is a spread challenge that I started just under a year ago. You can see right here, or just over a year ago, I should say. And in that time, I have 342 trades, 289 are winners, 53 are losses, 84.5% win rate, and I have $80,000 in profit. So I am up, what is that? 5,000 to 85,000 or 86,000. Let's just do 85,000. I'm up 1,000%. I'm up like 1,500, 1,600% in just under a year. Again, it's a consistent strategy. It's going to be lower profits, but very consistent. Look at the win rate. And basically what I do is, and again, this is where people get confused and they're like, oh, that doesn't make sense. Why would you do that? You could be doing other options and making money like that. Listen, if you want to do that, go ahead. I make a consistent income trading spreads. So, I try to teach this over and over again. And I'm so glad to see that people have actually truly been asking me and starting to see the consistency that could come from spreads. I have people that totally change their lives from spreads. And I'm so happy to hear that and be a part of that journey. In this case, what I do to do risk management on this is, let's set it for an example. Okay. Let's say you have $100,000 account and you're like, okay, I'm okay with losing $1,000 every day. Now I'm just saying that as an example. Okay, you're okay with risking $1,000. Perfect. So what that means is you're going to look for a profit of $500 a day. Because what I do is I do 2 times the risk of my profit. So if I am looking to gain $500 a day, I'm okay with losing $1,000 if that happens. Now, you can see here are my results over those months. Okay. In February, I had 2,000. March was the only losing month I've had this year in spreads. And then you could start to see it really starts to climb. In November being my best month at $14,750. Now, these numbers aren't exact, obviously, because there's pennies involved and stuff like that, but they are pretty damn close. I do this every time I take a trade. I update this every single time. I took a trade today. Okay. That's wrong. Hold on a second. Sorry. I took a trade today. Okay. I did an NDX iron condor, which in this case, I want the price to stay between two levels. I don't want, let's say for Qs, let's just say, I'll use Qs as an example here. I don't want Qs to get above 630 and I don't want Qs to go below 610. So in between that 610 to 630, I make profit. I get the contracts to go to zero. That is basically what you're doing. It's selling premium. You want the contracts to go to zero rather than go up. So I sold 17 contracts. I opened a position of 17 contracts. I was able to get $1.15 per contract. I put up $32,000 for the trade, and I came out with just about $2,000. My return on that investment was 5.8% on the day. And again, I came out with $2,000 in profit. Amazing day. I have no complaints there. Now I started another $5,000 account, or technically $4,500, because people asked. Forget this because I have to delete all the old trades from the other spreadsheet. I just copied it. But we started this one on 11/21, and we have had no loss since then. Okay, 4,500 to 5,400 in under 2 weeks. So already $1,000, already 25% gain in just 2 weeks. And again, I'm sizing pretty decent because I know my strategy. I'm okay with losing $1,000, $500. This is where, again, it matters per person. If you're coming into this, you're new, you want to test the waters out, you want to risk $200 a day, make $100 a day, do it. Learn it 100%. Get consistent with it. And then when you're like, okay, I built myself a nice buffer, I'm up $2,000. Now I want to risk $400 a day and make $200 a day, or risk $600 a day and make $300 a day. Just slowly, gradually grow it. This could literally be a second income. So same thing. We started this $400 for November, already at $540 for December. Obviously, we just started and it's been amazing. And again, you can see the dollar amount that I'm using. You can see my profit, and you could see my return on investment. And then some of these I closed, so you could see the percentage of profit I made on the trade. And then some of them I just let go 100%, and they go to zero. Now, any questions on that? I'm going to go into basically what a spread is. Casey Trades. Look at that sexy man. I'm going to go over what a spread is. And then if there's any questions after that, hammer me. I'm so happy to hear that. I'm up $40,000 doing spreads with GNODs. That is amazing. I'm really happy to hear that. Let me do this right here. No, I don't need this. Okay, let's go over what a spread is. Okay. So let's talk about maybe why I did a call credit spread today. And we'll use an example. Give me a second. Of one I sent out today, which was, again, an iron condor. We're going to use Qs as an example here. So for Qs, okay, the low of the day was 617.80 or 617.80. At the time of the trade, the high was, I think, around 622.30. And we got all the way up to 624. What I personally did and shared with everyone was I was selling a 614 put. Okay. So selling a 614 put, which is at this point, $3.80 below the low. And at this point was $8 below us. So I had a lot of room. I was over 1.3%, 1.5% out of the money there. and I bought a 609 put. Okay. So what this means is 614 and 609. That's a $5 strike difference, obviously. So for every contract I want to buy or open, I should say, then I will need $500 of collateral because there's a $5 strike difference. Okay. So if I enter one contract, and in this case, the premium for that was 9 cents. So $9. I would make $9 per every $500 collateral. Again, this is where people go, that makes no sense. Why would you ever do a trade like that? Because the probability of profit on that trade was over 94%. That's exactly why I'm going to do a trade on that. That's exactly why I've been doing trades like that for over 6 years now, doing spreads. And again, spreads is a literal consistent income for me, a second income. You could look again here. I did those same trades with Qs in the beginning. Yes, you're going to see losses. There is always going to be losses in any strategy you do, but look at the consistency. I went a month right here, a month and a half with no loss. Okay. You're going to see here, I go over another month and a half with no loss. And again, then you see I start to string a couple losses together, and that happens. That's where that 200% stop loss comes into place. It keeps that risk management in, and you're able to continue on and move to the next trade. Now, with that 200% stop loss, you can make your money back within 2 trades and be profitable, possibly within the second trade or definitely within the third. And again, you're looking at a 90% probability of profit. So that is why that 200% is in place. So let me finish what I was doing here. Let me give you another example. If I sold the 614 and bought the 612 puts, then it's a $2 strike difference and $200 collateral per contract. So you would, if you wanted 5 contracts, you would need $1,000. If you wanted 1 contract, you would need $200. So let's go into the example that I used today. Again, what I traded. So we sold the 614 and bought the 609, and we got 9 cents in premium because it takes the 614. Let's say the premium is 19 cents and the bought 609 put is 10 cents. It's 19 minus 10 gives you that 9 cents in premium. And then we're going to sell. We sold the 627 call and bought a 632 call. So same thing, $5 strike wide. So I stay within that same collateral. And because I'm doing a put and a call, it doesn't mean I need $1,000 in collateral now per contract. Because it's the same strike difference, $5 each way, it's still $500 collateral. So now you combined, I got 5 cents on that side. So now it's 14 cents per contract for a total of $500 in collateral per contract. So if I get 3 contracts, I need $1,500 and I can make $42. Okay. In this case, that's over a 3% trade return on your investment. Now, again, I got this around 622. We already knew our low of the day was around 617, 618. So we are $8 out of the money to the downside. And at this case, $5 out of money to the upside. Now, what I did here was I looked at Qs over the past few days. I could see 624.80 we didn't get over, and over the next few days it was like 626. Now, looking at what was kind of going on, and we already had we were already green. Look at how many times over the past few days. I was going to take a guess and say we weren't going to really push higher. That's why I did the condor. And you can see during the day, it kind of looks like here we're trending up, which obviously we did. But during that intraday move, we were just chopping around and burning premium. So that's why I added the call side and got some more premium out of it. So now that we got that example out of the way, let's do some questions because I know there's definitely going to be a lot of questions here. Okay, how much collateral do you use? Again, for me, it doesn't really matter to me because personally, I size pretty decently heavy. I've been doing this for 6+ years. I did it during COVID. I did it during 2022, during the volatility. I did it a month ago during the volatility. And those are actually my my best trades during the volatility because we could go so far out and still get a really strong premium. So for me, collateral, I'm just more so looking at what I want to make in profit, really. I don't care if I'm putting up personally $20,000. If I'm making $1,000 on that, I know my risk is 2,000, and that's all I personally care about. That's me. Again, so you know, that's what I would suggest with that. Find your profit that you want, find your stop loss that you want. Your max loss that you are okay with losing per day or risking per day. What makes you confident not ending with the short sides in the money when we've had quite volatile moves in direction? So when I'm picking the strikes as well, yes, I'm looking at the charts, but also if you go on any brokerage, so for example, I'm just going to go on Robinhood. I'm going to do this on my phone. If you go on Robinhood, if you go on Webull, if you go on E-Trade, anything you do, you go to QQQ, you go to whatever stock you want to do it on. Okay. So we have to do tomorrow's contracts right now because obviously today's over. If I'm looking at 617 puts for tomorrow, I'm selling 617 puts. The chance of profit on Robinhood, it says it right there, is 87%. Now, if you're on other brokerages and it doesn't show a chance of profit, all you got to do is click the contract that you want to sell and look at the delta. So if the delta is 15, that means you have an 85% chance of profit. You take the delta out of 1, so 1 minus 15, 85%. That is also how you can get your chance of profit, your probability of profit. Just so, simple math, it's 1 minus whatever the delta is as well. I always look for 88% plus probability of profit, and that's where I'm getting that. That's why the win rate is high, and why it's a consistent strategy. How come so I basically kind of just answer this question. One, I look at the charts and then I literally do what I just said. I'm looking at a 88% probability of profit, and trying to go, out of the money there. 40 cons, that's the day's work. You close the losses. Are they hard to get filled? No, this is very simple. So when you're selling, so when you open it, it's a credit spread. When you sell it, it's technically considered a debit. So when you're selling it, when you're opening the position, you're buying at the bid. You're opening at the bid. When you're closing the position, you're closing it at the ask. So me personally, how I do it is I usually put the limit cents above the ask. So it acts like a market order. I've had no issues over my 6 years of really ever getting hard to get filled. Now with NDX, there could be times where, with the spreads with NDX, yes. But truly, no, I still have no issues because of the same thing that I just stated. You need to be level 3 options for any brokerage, and you need a margin account for this. Now, people hear margin and they go crazy. This does not mean you use the margin. I have not used the margin ever. I don't even actually, if you want me to be honest with you, I actually don't think they allow you to use the margin on this. I think you just need a margin account. I could be wrong there, but yeah, I have never used the margin. How did you assess the percentage of probability? Yep, we just went over that. Sorry, I'm just going through these. Okay, so this is a good question. And you can kind of see here. Curious if you typically close out your spreads before end of day, or do you just let it expire since you've already calculated the percentage of winning already? So obviously, as you go throughout the day, that probability of profit could change. If it's going in your direction, let's say I'm selling put spreads and we continue to go higher, obviously my chance of profit is just going to continue to rise because it's going away from my sold strike. And again, the premium is already going down to zero. Now you can see over the last few days, I took some profits early. And honestly, that was just a volatility thing, just being smart. And I just felt like I wanted to be safer and do that. And then you can see here, I also had some 100%ers that I just let expire because we were, again, working out perfectly. I had no reason to sell it. So if it's quick in the day, let's say I sold a put and put spread and we rip, right after I sell it, I'm already up 70%. I'm probably going to close it because I could possibly open another one and make double the profit. Another thing I'm going to talk about here is some rules I personally set inside is I wait until 10:30 a.m. Eastern to open a spread. I like to get that first hour out of the way. Obviously, 9:45 and 10 o'clock, you usually have data. You get that out of the way. And then you start to kind of see what the direction is in the market. And it just gives me a better opportunity to, find the trend, ride with that trend, and, take a position that way. Again, if you guys have any more questions, I am going to end this in the next few minutes. Thanks, Knots. Have a good night. Yep. Thank you. I appreciate it. Hopefully, this helped out. The percentage of profit on price closing. Yes, 100%. It could easily still hit your 2x stop loss. And again, that's part of trading. It's just like if you went long calls, it could get stopped out on a strategy. Oh, what did Casey say? Sorry. Oh, yeah, 100%. So, yes, I've been working with them on getting spreads, and we thought, the possibility was we could get it out this week, and it has to be pushed back. We want to make sure it's tested and 100% before we send that out. So, it will be sometime in the new year. It's not going to be any time this year. If you have any questions on being able to copy my spreads, I do have another product right now that could do so. So if you have any questions on that and you're interested in copying spreads, just send me a message. But spreads is a strategy that, again, is so consistent. And I'm so happy a lot of people are getting into it now that I just want you guys to ask me questions. I want you guys to learn the strategy, execute the strategy, because it could really be a game changer. Again, I've seen people change their lives off of spreads alone. And that's basically that. If there's not any more questions in the next minute or so, we'll kind of cut it here. Hopefully this was helpful for everyone. I try to make it nice and quick, 30 minutes, 40 minutes. We kind of jam-packed a lot of things in there, and, I hope this was definitely beneficial for everyone. I just want to see people succeed, and I want to help people in any way possible. So, because I would hope the same thing would be done for me, truly. So, again, if you guys have any questions, feel free to ask. If not, we're going to close this down in just a minute here. If you're interested in, I guess while I have it, if you're interested, Vanquish Trader is an options platform or prop firm. And they are the only prop firm I know that could do spreads. And I just started with them, and I'm at 4,000 since I started with them. It says a 50% win ratio. That's because they have it that they calculate the losing strikes as a loss. I'm actually 100% win ratio, and I'm making 500 plus a day, and I'm almost at that 55,000 to be funded. How do we contact you? You can contact me on Discord in a DM, or you can contact me on X at Bull Trade Finder. How do you manage the PDT rule in a small account? Again, if you do margin and level 3 options, just 3 day trades a week. I mean, there's no reason to go over it. Just be smart, 3 day trades a week. It is 100% possible. I am currently doing it on a $5,000 account, and I have no issues. Now, hold on. Before we actually continue that, let me actually bring this up, because you will see that in some cases, I did do more than 5 day trades in a week. So let me explain that. In this case, if I let them go 100%, it doesn't count as a day trade with NDX. Let me clarify that, with NDX, because NDX is a cash close. It closes at 4 p.m. That is it. Nothing else. Now, in this case, I think I actually swung one of these too, though. One of these that I won on. It might have been this one. I'm pretty sure it was this one. So that's another thing. But thank you and looking forward to trading with you tomorrow on the Heat Seeker channel. Appreciate it, Andy. Yes, I'll be live trading like I normally am every single morning. You know, I posted in all the Discords. I posted on X. I'm live trading. I would love for everyone to follow. How do you contact? Again, you can contact me on Discord. Obviously, GNots, if wherever you actually got this link, contact me. If you got it on X, contact me, DM me. If you found it on Discord, DM me. I answer everything. If you could ask anyone, I answer every single DM. I'm not one of those people that just lets them die into the abyss. I want to help people. I truly do. And sadly, we do not have those people in this world. If you want me to be honest with you. And again, I do that because I would hope that I would get the same exact help if I was being asked, if I was asking. So that's why. How long till expiration do you get the contracts? So I think I understand this. I don't know why my brain just like farted. But I'm doing same day expirations on these. How long till expiration do you get the contracts? Is that answering your question, Lewis? Just to make sure. You could no. So what you could do is you could sell puts, or you could do covered calls. Selling puts is like a wheel strategy, is what it's technically called. So let's say, for example, you want to. I'll use Rivian example. Okay, you like Rivian. You sell a $15 put. You can't buy a $14 put and make it a spread. So that's that. And then if you have 100 contracts of, let's say, Rivian, you could sell a covered call. Now, thank you guys for showing up. I appreciate it. And for asking questions. You're asking questions that other people may have. So really appreciate that. Thank you. Thank you. Okay. I'm glad to answer that question, Lewis. And if anyone has any more questions, DM me. I am 100% free. Just please ask questions. I do not bite. I am the most easygoing person out there. Again, I just want to see people succeed. I hope you all have a great night. If you're interested in trading spreads with us and just trading in general, you can check us out at Bull Trade Finder and use that code. If you're looking for that spreads or options prop firm, use Vanquish Trader. Look that up and use code BTF. It'll take a big chunk off your prop firm. And Top One Futures for futures. I know people look for that stuff, so that's why I have these codes here if people want to use them. But other than that, I hope everyone has a great night. I will catch you guys tomorrow, 9:30 a.m. We're live trading. We go over all our entries, all our exits, our wins, our losses. Again, today, options-wise, I technically lost. But overall on the day, because of spreads, I turned a profit. And I'm perfectly fine with that. Green is green. Again, I'm not happy about some of my options trades, but again, we learn, we grow, and that is all you got to do. I will catch you guys later. I hope you all have a great night.